Welcome back, everyone. We're going to cover the stock market charts, run some technical analysis against what we're seeing. This market has gone, pretty much crazy. For the most part, it's just tech rallying again. It's just more of the same, I guess. It's just continuation of what we've continued to see. Tech rallies, FANG rallies, S&P 500 doesn't rally, and that's what we're seeing. So S&P 500, here's the S&P 500, and what I mean by the S&P 500 is not rallying, it's up 0.5% today. So yes, the S&P 500 is rallying, but it's just the FANG stocks. And if you look at the equal weighted S&P 500, here it is up 0.7, basically flat. So equal weighted, we're flat. And if you incorporate the heavily weighted FANG stocks and give them the market cap that they have, then you're up 0.5%. So it's FANG rallying again. You can see here's my heat map, and basically Apple, Google, Facebook, Amazon, Walmart's, contributing a little bit. But for the most part, the weighting comes down to the app. If Apple, Facebook, Google, and Amazon are rallying or moving higher, then the S&P 500 will move higher. You could have all the stocks essentially selling off, and the S&P 500 will still move higher because they have such a heavily weighting. But you can see the rest of the market is flat to weak, basically. A little bit here and there in industrials, but you can see the green and the red for yourself. So if you look at the S&P 500 and the RSP, it gives you an idea of what's actually moving. And again, it's just FANG. So let's look at the Qs. The Qs is just on kind of an auto bid, basically. The algos are just completely buying it up, and pretty overextended at this point. So it's not something that I'm not looking to, jump on board this train. Way overextended. The RSI, let's go to the weekly here and I'll show you what I mean. Here's the RSI. I've been kind of looking at these things, and the RSI, let me get rid of this line right here on the weekly. You can see that the RSI is sitting at 79. If you go back and look at levels where it was previously at that's getting to the max range of the RSI. This is the weekly, so this goes all the way back to 2000. This is going back 20 years, and you can see that we're basically towards the top end. If I mark that out, you can see here, we're right there. That's the RSI. And we've been there, a couple times, once, twice, three, for about 5 times in the last 20 years. We've been this overbought on the weekly chart, and we are, we're that overbought now. So typically this kind of price action, you can see here back in 1999, we hit 83 in the RSI on the weekly, and that marked out, it wasn't the top actually of the prices, but it was right about here in the in that stock market bubble. And so you still had a little ways to go from there. You can, really, from the highs, we still went up about 30%. So yeah, this thing can keep going, and that's the point, that there's no sell signal saying that it's not going to keep going. It obviously can keep going. It could stop right here. There's nothing that says it's going to stop right here. But it does tell you that you're in the area of kind of a blow off top, where with this kind of a move, you have the potential for a big down move. Is it going to be as big as the 2000 drop? Who knows? Nobody knows. But, in this scenario, just pointing this out, if you bought if you got long this in kind of a FOMO move, a blow off top, you made a 30%, you were up 30% potentially, but then that was followed by a sell-off that actually fell 47% right there. That was the initial sell-off. And ultimately, the bottom, 82%. And remember, you have to go up twice as much, basically, for every percentage that you fall. So if you fall, if you're at $10 and you fall down to $5, that's a 100% drop. And if you rose 100%, you would only be at 750. Okay, so you would have to go up 200% basically to make back your basically break even. So that's why drops when something goes up 300%, but then it drops 80% or whatever. it's substantial. So just want to point it out. Let's narrow it down and look at what we got just for today. All right, so here's what I got in the Qs. We've got two uptrend lines I'm watching. First one is the May rally or March rally. This is your kind of general uptrend. And then we're starting to get some lift off in this shorter uptrend right here. Looks to me like the blow off top move of this rally. So the sell signal that I see is going to come on a break of this trend line. When we break this, that should set us in motion to head down here. And then, we'll see if there's enough selling pressure to break through this and start to head lower. But until you see the break of this upper trend line in the Qs, there's nothing to get short against. And the SPY is going to continue to go higher, going over to the SPY here, while the Qs is rallying because the market weighting is so heavy. And so we're continuing to see that. IWM, I cut this short a while, just a little bit ago, break even basically. I didn't like the price action. It just wasn't selling off. It wasn't really going higher, wasn't selling off, but the rest of the market's rallying. And I don't want to be in, I don't expect this to completely sell off hard until the rest of the market sells off. So took this one off the table. We'll wait for a better opportunity. I think there's going to be a great opportunity to short the Qs and tech basically, but you got to wait for those sell signals. And that's really what I see. Now, again, on the RSI, way overbought. Doesn't mean it can't, it can continue to get more overbought, or it can the RSI can start to sell off, but then the market continues to rally another 30%. Nobody knows, but ultimately we got to just wait to see a sell signal. If you're long this thing, obviously you can just stay long, trail your stops, and see how far it goes. But if you're not long and you haven't been long, to me it just doesn't seem like a good risk reward to get long. So here's NASDAQ futures NQ, and I'm watching these as well. They're starting to wedge out. Here's your wedge. It's kind of a price channel, but it's starting to make a wedge, and we're up here near the top of the wedge. So I'd expect this to start to sell off, reject, come back down here at some point in time. But I want to see a breakdown of this support. A breakdown of this support should correlate with that breakdown in the Qs in that minor uptrend line right here. Volatility continues to rise. Someone pointed out about this volatility instrument, and I think it's a good thing to mention. So for one, these volatility, this is an ultra VIX short. Anytime you see the word ultra, that means they're leveraged essentially. They use futures to give you leverage or 2 times the value of they try to track the VIX using futures, but they use leverage and derivatives to get the multiplier. And so anytime there's a multiplier, a 2 times short ETF or something like that, you will have decay. However, the decay only really works, the decay only shows up when something's going against you or sideways. So if this thing continues to move down, then the price action's working against you and the decay. And if it goes sideways, the decay is working against you as well. When something's trending in your favor, the decay actually can work in your favor, and you can get a little bit higher of a gain. However, these are extremely volatile, so this is not an investment tool. And again, everything on this channel is just my opinion. Nothing is trading advice. There's obviously risk involved, yada yada yada. But this, I use these for very short-term plays, and I don't take large positions in these. I stage in appropriately against trend line support. So I don't own this right now. I'm waiting for this to come back down to this support line right here, and then I'll look to buy it. If it doesn't and it just runs up and I miss it, that's it. I'll miss it. So that's something about these. These can be crazy, and they're not investment tools. You don't want to just buy and hold these things for years. These are really just used to catch kind of a momentum move. And the momentum move we're looking for is a sell-off in the stock market indices, basically. And that should give you that spike higher in volatility that I would use to sell into. That's how I'm going to play this. Okay, the dollar. The dollar's important because, a lot of people say you get the dollar right, you get everything else right. And for the most part, that's true because everything's priced in the dollar. Dollar's catching a bid today. And so Really, this looks like a lower low here, and we are, slightly downtrending. Can mark it out. It's maybe something like that. We're making lower lows, but mark it out right there. But, starting to diverge a little bit. If I go to the daily here, you can see right there, right in here is your divergence. You can see it right there. There's positive divergence, and it's in the PPO as well, but shows clearly in the RSI. But there's your positive divergence. So each low, this low that the dollar just made, was on a higher momentum. So the dollar's actually catching that. That's a sign right there that the dollar is going to, reverse and move higher. Doesn't mean it will, but this momentum indicator, this positive divergence, the more and more, the lower prices is made on less and less volume. So there's positive divergence there. So that's a bullish setup in the dollar. The dollar moving higher should be bearish for gold. So here is gold. You can see still below resistance right here. We've got resistance right there at 1975. That was really your blow off top area right there. And then we've come back down, chopped above it a little bit, still holding below. And if I go to the hourly, it's clear, more clear to see that. You can see here, look, we broke below, came back, it held the support there, then it broke back below, held as resistance here, resistance again, went above, broke below. It's a pivot point. So this is a battleground right now. The dollar and gold are both in a battleground. Ultimately, something will be decided, and you'll see the impulsive move. I think the dollar is going higher. I think the dollar is going up to this 95. Let's mark it out to show you. And the bullish divergence shows me, tells me that this bullish divergence is forecasting. It's a leading indicator when you see divergences that it's forecasting the dollar to move higher, because it's diverging. The bullish indicator is moving higher, prices are moving lower. This is a leading indicator that it's saying prices could potentially start to move higher. I think the dollar is going to head up here to this 95.20, run up and tag that as resistance, and then probably sell off from there. And again, I think gold is going to come down to the 1790, tag that, hold support, and then probably continue to build on the longer term bull market that it is in. Gold is in a longer term bull market. Still short PAAS and Barrick Gold. These are just short term trades for me. I'm not looking to be short these things forever. And in fact, I'd rather be long gold miners longer term. But in the short term, looking for Pan American Silver to come back down to this 30.50 and $26, somewhere in there. Obviously, my levels could be off slightly. And, we popped above. Here's the daily close. This is interesting to see this. Here's resistance at this 36.20. Had that marked out. We ran up, held that resistance right here, sold off, came back, and intraday right here, this intraday, we popped above it, but failed to close above it that day. So that daily close still closed below resistance. Today, popped, opened basically higher and sold off back below it. So two clean and clear rejections right there of that level. That's holding so far as resistance. And they had two attempts to break above it and failed. So to me, that's pretty bearish. I think we'll probably, I think this is going lower ultimately. And then Barrick Gold, Barrick Gold's just, here's an uptrend line that we had. We broke, we back tested, we're kind of running sideways. I think we're going to go lower, and it should go lower with the rest of the miners basically. XLF continues to trade below trend. Here's your trend from the March lows. XLF, everyone likes to say the market's so strong, but then they only want to point to tech. Yeah, tech's strong, but you got XLF, pretty weak. So way below the highs. XLF's below trend right here. They could easily gap it up and recover the trend, or this thing could start to sell off and forecast maybe a sell off in tech. Because tech's so heavily weighted in all the sectors, it hides some of the weakness in the other sectors. And it's not even really tech that's strong. For the most part, it's Apple. It's the largest company in the world, and Apple's up 4% today. That's going to move the markets. It doesn't matter what the rest of the market's doing. If Apple's up 4%, the markets are moving because they're weighted so heavily. So let's look at Apple, because when Apple breaks or fails, the market's going to fail. The market is heavily reliant on the FANG stocks. Without the FANGs, the market is, you see that how the equal weighted S&P 500 is acting today. It's flat. So without the weighting, the markets aren't moving higher. And you can see here on the RSI, look at the RSI. We are sitting on Apple at about 81, close to 82 basically. And if I mark that out on this daily chart, we can go back and see how overbought that this thing can become and what happens when it gets this overbought. So we just roll it back a little bit. This is going back a few years. So you can see we're near the top end of the range. It can go higher. Apple went higher here, slightly higher up to 88. And it, that was followed by a pullback. There was a pullback, basically when it marked 88, it did it twice. It went up about 10 or 11% higher. And then that was followed by a 45% drawdown. So yes, there could be 10% more. You don't know if there's going to be, and there could be a 40% drawdown. The point is risk reward, 10% up for the risk of a 45% drawdown is not a good risk reward. Also here, you can see here, right here, we were about that overbought, sitting at 82. This one, we went up and then we came down basically sideways. You can see here we went up from that moment. We went up about another 12%. And then we had a drawdown, from the highs, we had a drawdown of 31%. So, 12% up, 31% down. Again, risk reward wasn't very favorable. Here, let's see. Here we were more overbought right here. And there was no real drawdown. It continued to went up. However, this was fiscal stimulus 2017. That's when they passed the tax law, and there was a lot of fiscal stimulus. Corporate earnings basically instantly jumped because their tax liability was reduced. So that's a little bit of a different year because you had such a big tailwinds to the market. Here we were overbought again right there, sitting about 83. And there, that was basically the top. When we got to 83, we really didn't go up much more, and we had a drawdown of about 36%. And then here, again, we were overbought right there, about as overbought, sitting at 83. And that also pretty much marked the top, and that was a drawdown of about 35%, 34%. So big drawdowns come when we get this overbought. That's the point. Now, yes, there's also sometimes some more upside, but also, it's followed by potentially big drawdowns. So risk reward doesn't look good to me. That's the point I want to make on this one. Tesla's getting a little bit of a pullback today, about 5%. Small in the big scheme of things. But here's what we're watching. Here's the uptrend line in Tesla. And you can see this is really when it just pretty much started to go parabolic right here. And we're coming down to it. So that should hold the support. If it doesn't, expect a big swift move to the downside. Again, I don't think Tesla's going to break down below this trend line during regular market hours. I think it's going to happen in the overnight session, and you're going to wake up to a big gap down. A lot of the time when you have such a bullish move, not everybody gets to just get out all at once. So oftentimes you'll have some sort of a gap down or trap move or something. And so that's the thing. It's hard to short because you're still above trend and this just continues to rip higher. You don't exactly know when it's going to break. But then by the time it does break, you miss you miss the good entry, the objective entry. So one way to play it, it's higher risk, is to start to scale into shorts on this thing. Don't take it all at once, but scale in as it continues to go higher. Scale in, and then you can potentially catch it. Again, that's higher risk because there's no sell signal, there's no break in trend. Now, if I look at the daily here, you can see a little bit of negative divergence starting to curl back down here as well. Here is the RSI. That's negative. Slightly higher RSI right there. And the PPO is starting to curl back down. It's kind of flatlining right here, but it does show negative divergence there. So this is a divergent high on the RSI and the PPO, and it is also starting to curl back down. So could forecast, that breakdown. There could be another leg up though. So just want to point that out. KHC looks like it's coming down to support. Support's sitting right here at 33.50, and we're heading down. This is what I thought was going to happen in this thing. Here's the daily. We tagged resistance, overshot it just briefly, and failed and started to head lower. So a lot like PAAS, when you hit resistance and fail, then usually you go down and do a test of support. So we're kind of, we started, look, bounce rally here, continuing to roll over. So looks like we're going to head down to this 33.50. That's good support, because if I roll out on the daily, you can see this was major support. Held this resistance for a long time. Resistance here, then we broke above. We've been trading above, come down, should hold. It's an objective area to potentially go long if you get down to this 33.50 or somewhere in the area. And then if that fails and it breaks down, then then you could close the trade. Another thing to watch for is maybe it comes down and breaks down and undercuts it and then holds and recovers it, and that would be a bear trap. That would be very bullish. That should set this thing up. I think that would be a nice entry if it does that, for a potential gap fill or move up through all the way to fill the gap at 47, 48, and 42. Here's kind of the bottom of this area right here. So I'm watching for that one, and still have bullish divergence right here on the RSI and the PPO. You can see it's positive divergence, so looks good. And not really divergence, I guess, because the prices are moving higher and the momentum's moving higher. So it's not actually diverging, it's just confirming the price action. Okay, that's all I got for this video. There's not too much more. It's just really more of the same. So we just continue to watch for a change in this price action. Until then, we'll just sit back and wait. So thanks for watching. Appreciate it, and catch you guys on the next one.